Hello and welcome everyone to this important Tesla Monday trading update. Today we have March 10th, 2025, and we are now at this point used to it. It is a bloodbath in the markets. So I think a lot of us are asking ourselves, what the hell is going on? And what are we going to do now with our Tesla core holding? And how do we generate alpha this year in this very, very challenging market environment? So before we go into the details, what this all means, let's take a quick look at the mess that is the market today and see what we might be able to do about this whole situation. We see, let's start here with Tesla. Tesla is down again dramatically, 9.32% as we speak, 238. Like, think about that, 238. We were at 480, in December 17th. So we now are officially more than 50% off from the highs of 2024, which is absolutely crazy given the progress, the insane positive news we have seen coming out of Tesla. But nevertheless, we are down 50%. But when we look at the greater stock environment, what we see is Tesla is not the only stock down. We see here pretty dramatic losses across the board. We see Robinhood. I have some holdings in Robinhood, by the way, small, down 13%. Can you believe that? And Robinhood didn't have a good March and February. So 13% down. We see SoFi, also one of the high flyers, down dramatically. We see Google down 4.6%. Apple down 5%. It's absolutely crazy. And we also see that the VIX is at 26 plus 12% today. So this is getting into very, very critical territory. And when we take a quick look at the fear index of CNN, of the market, the fear and greed index, that's also very important to see. It has been in the extreme fear category for quite a while. But look at this today. This is really, really bad. I think that's the worst reading we have seen in a very, very long time. At 16. And for those of you who are not familiar with this thing, this measures the fear and greed on Wall Street in the markets. Extreme greed means sell, extreme fear means buy, to simplify it. When everyone is afraid, right? Normally you want to buy. When everyone is extremely greedy, you want to sell. And 1 year ago, you saw that it was in the greed 70s, so in March 2024. And a week ago, it was at 18, and now we are at 16. So, I'm going to jump a little bit ahead. I'm telling you, at that amount of extreme fear is not a good point to sell, because very likely a lot of selling has already been taken place, and we are now wandering into the area of complete irrationality. What does CNBC say about the situation? Dow tumbles 300 points, S&P falls to the lowest since September. So that is before the election of Trump. Think about that. In September last year, there was still a significant risk of Kamala becoming president, and extreme risks to the economy and the country and the future. Now we are back there just because of some tariff discussions. So one of the new reasons for this panic, I wouldn't say panic yet, but extreme fear, is the talk of recession. We saw the GDP growth corrected downwards for the first quarter. But Trump also didn't deny that we might go into a recession because of whatever, tariffs and so on. And I also published a video last week why Trump actually has an interest in tanking the markets, scaring the Fed a little bit, because he has to refinance up to 9 trillion in debt. And if he pays 1% less interest, he could save over $200 billion. So this is a little bit of strategy of Trump. I think that he's not doing too much to calm down the markets, but it's also a good sign, in my opinion, that things can't be that bad behind the scenes. Otherwise, Trump wouldn't take these risks. So that's kind of the situation. What does it all mean for Tesla? Let's go into something I prepared here that I think can be very, very helpful to understand. And I will make this a little bigger. I want you to take a step back. I know it's very painful if you are down so much on paper. I am in the same shoes. I will tell you in a second what I did so far to reposition the portfolio. Not too much, full disclosure. I actually increased leverage a week ago. Not leverage, but indirect leverage, not margin. Margin is a bad idea in these times. But before we go into that, I want to show you this model here that I shared before to actually put the whole thing into perspective. Yes, strategic Tesla holders who understand we have crossed the line into the AI singularity. Crazy things are happening as we speak on productivity gains, on AI power, also on FSD. And Tesla is at the eye of the storm, at the forefront of this AI revolution. It's the only company that can roll out robotaxi and autonomous services across the board, across the world. It has a tremendous multi-tens of trillions of dollars opportunity with the Optimus robots, also in a quasi-monopoly situation. We discussed it all, why Tesla is ahead of all competitors here. But both on Robotaxi and on Optimus has this tremendous opportunity. I shared this model here a little bit where I show you some inputs. Here you have Optimus sales. Here you have 2024 all the way to 2040 projections that I created. You have the robotaxis. I have pretty conservative inputs here. You know, if you look at what's happening in 2027, I'm saying they will deploy 100,000 Optimus units by 2027. Total install base, 110,000 Optimus robots. That is pretty conservative because Elon already said they will have a tens of thousands run rate early 2026. I'm saying in total, they will have an install base end of 2027 of 110,000. So conservative assumptions. In robo fleets, I'm assuming 200,000 robo taxis deployed commercially in 2028. And next year, only 10,000 by end of 2026. That's not a lot. 50 this year, so I'm very, very conservative. And 50,000 in 2027. So these are not crazy numbers. And then, of course, it starts taking off because once these two things are cracked, there will be a very exponential demand. Everyone agrees to that. The question is, when is it cracked? I'm saying Optimus around 2027, 2028. And I'm saying Robotaxi at scale 2028. These are not crazy numbers, but they lead to my future fair value share price. As you all know, actually, I'm adjusting this weekly, so the numbers are always a little fluctuating, but I'm now with somewhat de-risking at 12,700 share price in 2030. And what I'm doing in this new model that I shared a couple of weeks before is to break that share price down into monthly future fair value share prices. So first annually, so you see that the fair value of Tesla was 366 last year in December. I'm saying this year in 2025, end of the year, we will look at 657. That is the fair value, future fair value of Tesla. I'm not saying that is the exact stock price we will end up to, but that should be the stock price we end up with. If not, it will oscillate around the share price. And I'm using this 657 share price to actually break it down here in this monthly model and running some simulations to give you a better idea what it means that Tesla right now is at 236 as we speak. This is live updating. So what does it mean that we are right now at 236? What does it mean we were at 300? You know, what does it all mean? And I will explain what it means. On the top line here, you see the fair value. This fair value monthly broken down is just assuming a linear distribution of the fair value growth all the way to the target this year of 657, which again is the result of a discounted cash flow model 10 years looking ahead of Tesla based on the assumption I shared. So Tesla end of this year will be worth $657 per share based on the future discounted cash flows, adjusted with some risk, with significant risks I'm putting in this model. And then you can break it down, right? If we were, beginning of the year here at 366 or something, then you can say how this actually distributes to get to 657. And that gives you monthly targets. So this is the innovation I'm introducing here to give us a little bit more reference and benchmark points. These are the actually fair value benchmarks. And what you see on this graph on the left is something that's automatically generated, where you see the red line, which is the fair value per month. And you see the yellow line, which is the share price. Of course, this is projected. This could end up anything here. But right now in March, we are actually down here. And the blue one is the discount you're getting, right? If the yellow real share price is below the red reference fair value, then you get a discount on the stock. And right now in March, given the situation, I think the Tesla share price is giving you a discount of 182. By the way, I can also introduce a percentage here, right? So this discount should give you this divided by the fair value. And then you see what percentage discount you get. That's a pretty good percentage. You know, you're getting basically 43% discount, which is crazy. And I like this model because it gives me a little bit an orientation point when things go crazy in either direction. As you see here, you get negative discounts, right, in my assumption. But it tells you how cheap Tesla actually is. You get something with a 43% discount. And I'm assuming, right, that this wild macro situation resolves itself. I will explain in a minute why I believe that by the second half of the year. I also believe Robotaxi will be in time and probably launch successfully and probably have some good numbers for us, which could easily get the shares to something around 650 by August. I think that's a optimistic scenario, but not crazy. And what this model shows us is also if this happens, which is, I think, the most likely current situation, that the stock goes over 600 by August, you also see that, in my opinion, in my model, in a conservative valuation model, you're getting into negative discount territory. So you're going to pay a premium over what you should pay. And then it probably drops back, right? So this percentage discount, if it goes to 650 in August, goes to minus 18%. And technically, if you are very conservative, you probably shouldn't buy the stock then. So that's what I'm seeing here. And this model helps us a little bit to put things into perspective. Because if you don't have a model like this, we get panicked, like, oh my God, where's Tesla? Why is it dropping like a stone? And what's even going on? So I think this might be helpful for you guys to see how I think around this. And I think the most important lesson we can learn from these crazy market actions is that you need to have a model. You need to have some conviction, ideally quantified conviction, what is actually going on. Otherwise, you become a victim of these crazy, crazy market actions we are seeing right now. So what is it that we can do in this situation? After the stock dropped a lot 2 weeks ago, I actually decided to take from my core position 30% of the table in stocks and reinvest it right away into leaps. Why? Because leaps give you a little bit of leverage without taking margin risks. So I'm aiming at a 900 strike price 2026 December leap. Don't buy the same one. Just let's try to distribute this so we are not driving up prices. So I'm only invested 70% in my core position Tesla right now. I took 30% of the capital out of stocks and put it into leaps, which is an aggressive move. For now, I'm not going to do anything else because right now, for the next 5 weeks, I can't be very bullish because what I'm seeing is a giant mess in the markets. I'm also not very bearish, right? I'm also not taking stuff out of my portfolio right now and go into cash because of the fear index. If something drops like a stone this crazy, if fear goes through the roof, this is the worst situation where you can go sell. Why? Because most people will already have done that. So that doesn't mean I'm calling a bottom, but I'm also definitely not calling for getting out of the market right now. That probably would turn out to be a bad decision. But I'm also not saying buy. I'm not buying anything more. I'm not shifting anything more from stocks into options because there's a second rule. One rule tells me do not sell. Do not sell at this level of fear after the market dropped that much. The other rule says don't try to catch a falling knife, right? We are on a clear downtrend. So let's just let it play out. And maybe you think, Joe, you're contradicting yourself. You're saying you don't want to buy, you don't want to sell. No, I'm not contradicting myself. I'm saying these two signals tell me do not buy and do not go into more leverage here with more leaps for now. Wait, because this will probably likely go lower, but also don't sell because at any moment in time, sentiment can switch and then we are sitting on an absolutely coiled spring. And Tom Lee of Fundstrat said this, the best 10 days in a year make up, I forgot the number, 90% of the returns in 10 days. So if you're missing any of these best days, and any day now could be one of the best days of the year, because we dropped completely into oversold territory, mostly on fake news, if you ask me. I think the main and only risk fundamentally for Tesla is that they're messing up the Robotaxi launch, which might happen, but we do not have any indications for this. In fact, we only have different opposing indications that Robotaxi launch is actually going to happen in June. I think this is much more likely than not. But the main risk for Tesla, where this could get derailed, is if Robotaxi completely messes up the launch, gets delayed a lot, or goes wrong. I don't think that's likely. The second big risk is that the markets get derailed and we see a major crash. We see a giant recession or something. These are the only two risks. And if neither one happens, we see this 43% discount on Tesla. And this is one of the best entry points. I would still wait. I want to shift more into leaps. I want to get more leverage on Tesla because I think it will be epic what's going to happen the second half of the year. But I'm not taking any action. I want to wait. So far, I don't see any red flags on a fundamental or strategic level. None. I only see green flags. So keep calm, focus. The strategic market risk, that might be the other big risk for derailing our thesis. The reason I'm not nervous is because of Trump. Trump's behavior right now clearly indicates that he and his advisors, who are probably the smartest people in the country when it comes to markets, they are not dummies. The reason that Trump can behave this badly with his tariffs and all the crazy stuff that's going on and Doge going all in, you can only do that if you're pretty sure that fundamentally you're on the right track. I would hypothesize that if Trump and his advisors would see any real market risks, any real economic risks, they would not do what they're doing. They're playing with fire, and the only reason they're actually not playing with dangerous fire is because I'm very sure that these people know that they are in a very fundamentally good position. That's why they can afford to create a little chaos to refinance their debt. They would not do that if there would be real structural risks that they're seeing. So in a way, Trump's behavior for me is confirmation that we are in a fundamentally bullish situation on a 6 months time scale. Doesn't mean it can't go lower in March and April, but I think we are actually much safer than people think because of that. That for me means we are still completely green on Tesla for this year, and we are getting greener by the day while the market is crashing. And that means the discount becomes exponentially more attractive. So the best thing to do, in my opinion, and what I'm doing this week, is nothing. I'm going to wait. I'm going to wait it out. I think for 5 weeks until the earnings call of Tesla, we probably have some turmoil. There's nothing to be too excited about these 5 weeks, but there's also definitely nothing that would make me sell anything. What I'm doing is I'm taking it day by day and week by week, seeing what the sentiment is. If I smell any kind of sentiment shift towards bullishness, then we have to go in with more leverage. But until then, I don't do anything. I observe the markets and I keep you guys updated. I hope that was helpful. Keep calm, keep moving on, focus on the facts, focus on models that are smart, and don't forget, it's all noise for now. See you soon.